Hey guys, welcome to Info Chunks. Many of you might be interested in the stock market. Some of you might already be investors. But have you ever wondered what happens after a buy or a sell call? What happens in the behind the scenes of a stock market? Let's look into that today. Before we get into the process of what happens, we must first get to know the parties or institutions who are involved in that process and make it possible. Number one, a clearing corporation. Every stock exchange will have a clearing corporation under them. As soon as the stock exchange finishes a trade, they become the orchestrator of the processes that happen after that trade. They're also in charge of risk management, which is when the buyer or seller don't fulfill their obligations, which does happen. Number two, a clearing member or the custodian. Clearing corporations will transfer the details of the trades to the custodians. Now, a custodian has two strong hands. On one hand, they hold the clearing bank account with a clearing bank, and on the other, a demat account with a depository. Number three, a clearing bank. Clearing banks are responsible for the settlement of funds in a trade. Every custodian will have a clearing account with them. And lastly, the depositories. Depositories hold your demat accounts. What is a demat account? Well, if you notice, you're not exactly holding your shares in the form of papers. You're holding them in a digital form or dematerialized form. These demat accounts are holding those shares which are in those dematerialized forms. Every custodian will also have a clearing pool account with them. Now that we personally got to know all these parties, let's get into the process. There are three phases in a transaction. Number one, the trade, which you might know. In the first phase, an order is made on the trading day or a T-day, that the buyer and the seller have come to a consensus of the price and quantity to trade. The stockbroker will become an intermediary between the parties and the stock market. After this, the transaction will move to the second phase called the clearance phase. This process is managed by the clearing corporations on the T+1 day. Clearing is a process where a clearing corporation will identify the price and the quantity of the security owed to the buyer and the amount of funds that is owed to the seller at the end of every trading day. They will send these details to the custodians and request confirmation. The custodian will check if the clearing banks have the available funds and the depositories have the available securities or stocks. After confirmation, the transaction will move to the final phase, the settlement phase. On the T+2 day, the shares will get transferred into the buyer's demat account and the money or funds will be moved to the seller's trading account. At this point, the trade is said to be settled. Now, if you notice, every step is digitally done, that is through the internet. Therefore, the whole process is actually fast and safe, which seems to be one of the main reasons for the massive growth of stock market all over the world. And because the stock market has expanded so much and thousands of investors have come in, there is no monopoly in the stock market. Previously, that is before this electronic transaction process was developed, there used to be a few and powerful investors who would dictate the prices of stock markets. Now, thankfully, that is no longer possible. Well, now you guys have had a peek into the behind the scenes of every stock market. I hope you found this video helpful, and I will see you guys in the next one. Adios.